Hope all is well. This is Ahad Ali, CPA. Today I want to talk about a very relevant, very current topic. It's cryptocurrency and taxes. So you're getting ready to file your taxes for the upcoming year, and you've sold some, cryptocurrency. You've made some gains. What do? How much taxes do you have to pay on it? And so let's get into this topic more in detail. The first point to know is that cryptocurrency in general is very similar to how stocks are taxed. So in general, you have a long-term and a short-term gain. It's called capital gains. Short-term means you've held an asset, maybe you purchased a Bitcoin and you sold it in 6 months. 6 months later you sold it, that's short-term capital gains. Now if you kept that Bitcoin for more than a year, it's long-term capital gains. And there's a big deal around long-term and short-term, and that's because the taxes you pay. On short-term capital gains, you pay a much higher tax rate because you pay an ordinary income tax rate. On long-term capital gains, you pay what's called capital gains tax rate, and generally the maximum is 20%. And with short-term, you can pay up to 35-40% on the federal level. So this is something that you can use to plan around. Afterwards, when you're paying taxes, you can net your losses and your gains, and maybe at the end of the year you're thinking about, okay, I have a big gain and I have some other crypto that I can sell that I know it's not going to go up. You can net these two things together that will help you offset your tax bill at the end of the year. And the most complicated thing that I feel with crypto and tax is the sheer amount of data. There's so many trades, and generally there's probably various websites that will help you get all this data gathered into one place, and they'll produce a form that you can give your accountant to include in your taxes. So do look into that. I think that will make your life much easier. So short term, long term, that's what you have to think about. Now there's a unique problem that in crypto world that people face is, what if you swap a coin for a coin? You're not necessarily selling it, you're not necessarily getting any payment for it. That's also a taxable event when it comes to crypto. So it's very important that that's also kept track of. Second of all, a lot of people ask me, oh, I sold my crypto and the money is sitting on the exchange. I have not cashed out. I have not withdrawn the money. It's not in my bank account. Well, actually, that doesn't matter whether you cash the money out or not. It's still a taxable event. It still counts as a sale, and you will have to calculate your loss from your gains. And so these are some of the key points you guys will need to keep in mind when you're doing your taxes. I highly recommend you see a tax professional because this is a very new topic. It's the rules are not fully concrete yet. Congress will definitely be making more changes to it, and so I'm happy to help. Definitely there's a link either at the bottom or the top of this video that will take you to our website, and we can take a look at your situation and see how we can help. Thanks for watching. Look forward to seeing you in the next video.